Should you pick a fixed or a variable rate in 2023? That's the question almost everyone is asking right now, and I'm going to aim to answer that question for you in this video. Stay tuned because we're going to break down everything on the other side. Welcome back to the channel. It's Alex McFadden here at Flow Mortgage Co. Make sure to hit that like, that subscribe button, everything, so you can get all of the update information that you need about real estate, mortgages, and creating wealth for your family. So let's get to the topic of the day: variable rates or fixed rate mortgages. What do you do and how do you make a decision in 2023? Now let's go back a little bit. As everybody knows, and for those who don't know that are watching the channel, fixed interest rates are ones that remain exactly the same for the term length that you choose. You can choose term lengths of 1, 2, 3, 4, 5, 6, sometimes 7 and 10-year terms. Variable rates typically come in the 3 and the 5-year flavor. Now in the market in 2023, we're in an interesting year of transition. The prime rate with most banks this time, as of May in 2023, is actually 6.7%, with the exception of TD at 6.85%. And so most variable rates today are above 6%, and in some cases in the high 5s, depending on your situation. So how do you make a decision on a fixed or a variable rate right now? A lot of it will come down to a few factors. Number one, your personal situation and how you feel about the market. What I mean by personal situation is, do you have the ability to A, qualify for a loan at a higher price point? B, what is your current comfort level with where the Bank of Canada is holding interest rates and when they might come down? And then C, what does it look like from a projection perspective? And what are your feelings on how long it's going to take for interest rates to come back down? Number one, when it comes to qualifying for a loan right now in Canada, we have a stress test that essentially means that you have to actually prove that you can make a payment at 2% above the rate that you have at this current time. And so if you're choosing a variable rate and it's at prime minus 30, which is 6.4% today, then you have to qualify at 8.4%. For many looking to get into the market or qualify to their maximum, this can negatively impact how much they can borrow, and it might make it so a variable rate just simply isn't an option. B, and number two, the second consideration here was realistically about where we're at in the cycle and what's happening in the marketplace. Right now, we're somewhere in the middle of the cycle where we're in a wait and see mode. The Bank of Canada has said that they're going to pause, but they haven't told us that they're not going to increase. They almost also haven't told us that they're going to decrease interest rates. This follows into the third option, which is really projections. Now, most of the prognosticators are suggesting that the Bank of Canada will lower interest rates by somewhere around 0.25% by the end of the year 2023, followed by some declines throughout 2024. If you look at a lot of the mapping, the suggestion is that within the next 18 months, we'll see interest rates come down by somewhere around 1 to 1.5%. So when you're modeling your actual cost, look at that as your consideration, 1 to 1.5% over the next 18 months after you've taken that variable rate mortgage. How does that impact you when it comes to taking a fixed rate? Now, the most popular fixed rate term in Canada today is actually not the 5-year fixed, it's the 3-year fixed. And that's because most lenders are offering favorable discounts on 3-year terms. But is that the right decision for you? There's a lot of things to consider. Now, the good side about a 3-year fix is that interest rates are typically coming in around the low 5s or the high 4% at this time right now. It's also a relatively short term, and Canadians typically don't make it past 3 years on a mortgage term, so it bodes well for most Canadians that might break their mortgage. Now, some of the disadvantages are that if we do see interest rates come down more than 1.5% or perhaps more than the 2% over the course of the next 2 years, you could be in a position where you're paying a significantly higher interest rate than market interest rates. So what you should consider when you're thinking about a fixed or a variable rate today is realistically your comfort level with the market changing, your comfort level with rates staying the same, and how you would feel if rates went down and you were unable to, or you had to pay a large penalty to get out. Now, if you do opt to go with a fixed rate mortgage today, we suggest considering going with a fair penalty lender. Now, a fair penalty lender is a lender that uses a standard interest rate differential to calculate the prepayment penalty on your mortgage. Essentially, what this means is you'll pay a lot less money with a fair penalty lender than a typical conventional bank. A standard bank fixed penalty could cost you as much as 5% or more when rates go back down to try and refinance out of that loan, whereas a fair penalty lender is typically around 1.5% to 2% of the balance. That could mean a significant difference if you needed to refinance or drop your interest rates in the near term. The reality is, whether you go a 1, 2, 3, 4, 5-year fixed, or you go with a variable rate, you have to make the decision that is right for you, and don't just follow the rates, or the market this time. Make sure that you're getting asked good questions, you're thinking of thoughtful responses, and you're considering your personal circumstance more than anyone else. No one knows what is going to happen with interest rates for sure, so you have to have a good strategy, and you have to make sure that you're partnered up with a mortgage company that is going to look out for your needs after you get the loan. The reality is rates won't stay high forever, and when they do come down, you want to make sure that you have someone who's looking out for your best interests. If you found this video helpful, make sure to hit that like, that subscribe button down below, and I look forward to seeing you very soon.